When you look at trade, the U.S. and China, they have a deal. They're going to be friends. Actually, no, they're not. We may have tariffs. It's pushed back in March. What's the overarching theme for the markets? Should they just ignore, or should they almost follow it, every week?
I think they should ignore it for tactical reasons. I think there is probably every expectation that there will be some sort of deal, and let's not forget. This is a deal that leaves us substantially worse off than we were 3 years ago, because pretty much 50 years of U.S. tariff reductions will have, when this is done, will have been undone. But I think strategically the market should be concerned, because I think deal or no deal, this issue of intellectual property, this issue of what people talk about, the tech Cold War, and the technological supremacy that both nations would like to, I think, achieve or maintain, as in the case of the United States, will weigh longer term on trade relations and therefore how the market does.
David, overall, do equities actually flatline this year? We're concerned about a slowdown. We're concerned about growth in Europe. Similar concerns in the U.S., albeit a little bit stronger than Europe. Are we just going to find a flat market in 2019?
Well, part of it is our starting point in terms of valuation. In 2018, of course, we started kind of at a rich valuation level. Earnings were okay, growth was okay, but the valuation level that we started the year in 2018 was quite high. Fast forward a year to 2019, valuation is much, much more acceptable as a value investor. We see especially places in Europe in particular where you see very, very low valuations. So if we enter at an acceptable and an attractive starting point, as I believe we did in 2019, I think as long as the global economy stays together, and it looks like we're going to grow someplace around 3.5%, that means earnings should still move up at least the mid-single-digit level. At this valuation starting point, that should be decent for equities. That's not to say it's going to boom, but we are starting at a very low, especially outside the U.S., valuation starting point, which would be good for equities.
Andreas, I want to touch upon your German expertise with Allianz as well. How do you weight the upset over German trade, how upset Germany is about potential tariffs with the United States? How do you weigh that versus China?
It's pretty significant. The German economy relies heavily on car and other capital goods exports. I don't think that Germany has fully woken up to the strategic threat of this. And you talked earlier about the euro. That's part of the reason I think the euro is weak. The eurozone economy is slowing. But also, if you think about it in terms of the stock market, the DAX is one of the worst performing stock markets in the world this year. Yes, it's up a little bit, but nowhere near as much as the S&P, the Dow, or the CAC 40 have recovered much more from its December lows.